This is the only chart you need to know in order to make life-changing money. It's the 5-year hodl wave for Bitcoin. It's this orange line on this long-term Bitcoin chart. The chart that starts in 2010, where Bitcoin was just a few cents, all the way to today, where Bitcoin is 28K. Now, why is this orange line here so important? And what does it show? It shows, in relation to the total supply of Bitcoin, how much Bitcoin has not moved in the last 5 years. So currently, almost 29% of all of Bitcoin hasn't moved in the last 5 years. So it basically shows what kind of money does not sell Bitcoin. How many investors are simply just buying and holding or using Bitcoin as a savings vehicle. This rarely goes down, right? It goes down very slightly in extreme bull market. But overall, this is ever increasing. Why is this so good? Because it shows how religious people are about Bitcoin. Bitcoin can go down 80% and those people simply just continue holding. They continue with dollar cost averaging. So that means that no matter how bad a bear market is, there will always be people that buy up the cheap Bitcoin. There will always be a floor. There won't be a situation where Bitcoin just goes to zero. And this is super valuable, right? When there is a certain crowd that never sells, then you can have a long-term positive outlook as well. It's basically a self-fulfilling prophecy. You've got these kinds of people in all markets, not just in Bitcoin. Got the same in stocks, for example, right? Warren Buffett buys when stocks are very low. He says, I'm buying simply a business, right? I'm buying the cash flows. And when that business is cheaper, I simply just buy more. I see it as an opportunity. Same is true for the property market, right? There are people that buy tons and tons of real estate. They take on a lot of debt. They're putting their whole financial future on the line for the property market to outperform fiat over the years. They don't really care about the cycles. And those are the kinds of people that make most money in these markets. And Bitcoin has the same kinds of people. So when you zoom in, it always looks terrifying when Bitcoin goes from 20K to 3.5K or from 69K to 17K. It looks very, very terrifying. It looks like the whole thing will fall apart. But in actuality, the fraction of Bitcoin that doesn't move, it increases over time. Bitcoin becomes more and more robust. But there are two effects here. On the one hand, we've got the long-term investors. They simply don't want to sell or they rarely sell. Then we've got the Bitcoin that simply just gets lost. And that's currently at 14.6K or 14.6% rather. So this line really never goes down. This is the 10-year hodl wave. And this is interesting because one might say, okay, Bitcoin also has inflation, right? There is Bitcoin mining. The miners, they get Bitcoin. They spend energy and get Bitcoin in return. Bitcoin also inflates. But what's being missed from that argument is that the pace at which Bitcoin gets lost is faster, it's higher. The fraction of Bitcoin that hasn't moved for at least 10 years increases with time. So the new issuance of Bitcoin doesn't change that. The issuance is slow enough. Now there's two ways to play this. There is the traditional way. The traditional way is simply just try to ride those bull markets, try to sell when things are elevated. And that's the standard way. One way to time this is the 1-year hodl wave. But there's also another way, which I'm going to talk about afterwards. The 1-year hodl wave, right here now in orange, shows how much of Bitcoin hasn't moved for at least 1 year. And this does go up and down quite a bit. This does reflect the cycles. So when this is very high, Bitcoin is comparatively scarce. When then the bull run hits, because Bitcoin isn't floating around that easily, that's then when this rather speculative money sells. That's then when the Bitcoin moves. That's then when also the price can deflate. But we can see whenever this orange line is high, a bull run tends to follow. We had this in January of 2016. We also had this in August of 2020 when Bitcoin went from 10K to 60K. Now we are again very, very high on this metric. Bitcoin isn't that freely floating, which would indicate it's likely that Bitcoin goes up from here. But here's the point. It's just likely, but it's definitely not certain. In the next 6 months, Bitcoin might as well go down. But what kind of bet do you feel more comfortable with? Would you rather say, I want to bet on a direction of Bitcoin going up in the next 6 months or in the next 5 years? I think betting that Bitcoin will be higher 5 years from now is way easier than betting that it will be higher 6 months from now because of this dynamic, right? Because there are people that simply just accumulate no matter what the price does. And so when that's the thesis, when Bitcoin becomes more and more of a savings vehicle and it outperforms fiat because of its lower inflation, then why not bet on this orange line rather than on this orange line? And how can you bet on this orange line? It's by holding for at least 5 years. Now, this doesn't sound so attractive, right? It doesn't sound so attractive in terms of return because when you bet on the cycles, you can make, say, a 15 or 20x even, right? From 3.5K to almost 70K, 20x. That does not necessarily happen when you ignore all the cycles. You simply just buy now and you hold for 5 years. Might be in the middle of the cycle again in 5 years, and maybe we are only at, say, 60K, or maybe we are only at 80K. It's not a 20x kind of return because you're not taking advantage of those peaks. You're not really taking advantage of the lowest lows. But what's important here is that the likelihood of the price being higher is very high. So when you think the likelihood of a high Bitcoin price 5 years from now is, say, 80 or 90%, and it's only, say, 55% if you look at half a year, then you can add more risk by using leverage. And I don't mean traditional leverage as in buying a levered product. I mean taking out a loan. I mean going to the bank, getting a personal loan, have 5 years of duration for that personal loan, buy Bitcoin on day one, and don't touch it until the loan is paid off. This sounds crazy, right? Borrowing money to buy crypto. But you're buying the best of the cryptocurrencies. You're buying the cryptocurrency that's likely going to survive. You're buying the cryptocurrency that has a bigger and bigger long-term holder base. And you're buying the cryptocurrency that's net deflationary after losses versus fiat that's likely going to get printed more in those next 5 years. It doesn't sound that crazy once you compare this to other assets that people take loans against. People take several years of borrowed money to buy a single house. And there's a lot of potential issues that can happen with a single house. Unforeseen repairs, construction maybe of a highway that reduces the attractiveness of the area, all kinds of things. Idiosyncratic risk, basically. Something similar that you take when you buy a single stock. Still, people take on all that risk. It's even worse for cars, right? People take on loans. They borrow money for a depreciating asset, for an asset that tends to have only half of its value 3 to 4 years from now. I think, for example, it's an incredibly good idea. Instead of buying a new car with borrowed money, buy a used car. Maybe one that's already 8 or 9 years old. That still doesn't have too much repairs, but that has already depreciated a lot. For the other money that you would have spent on a new car, just take a personal loan. A 5-year loan, a 6-year loan, purchase Bitcoin with it, and forget about it until the loan is paid off. You basically have zero risk. You only have a little bit less of life comfort for those few years. I think that's a super rational thing to do. But even besides that, right? Taking, say, 1 year of annual income as a loan, paying it off over 6 years, if you can easily serve those monthly payments, if you don't get into a cash flow crunch, then where's really the problem? Do you really expect that the Bitcoin maximalists will suddenly start changing their mind? It's very unlikely. And even if we do see more regulation, there will always be a place on earth where you will be able to turn Bitcoin into direct purchasing power, and Bitcoin will not go to zero. Bitcoin is a new emerging vehicle to transport value, not just geographically, but also over time. It's a better vehicle than gold because gold is more inflationary. Gold has already seen 100% of its adoption, and gold is also not as easy to transport across jurisdictions. You don't need to bet on the Bitcoin price in the next 6 months if this is not your thing. You can simply just bet on Bitcoin being higher 5 years from now, and if the returns don't look attractive enough, because it's maybe only a doubling or a tripling 5 years from now, then simply just lever it up. Lever it up enough that you feel happy about the potential gains, but also that you don't put yourself in any corner regarding the monthly payments of such a loan. I talked about this separately in this upcoming video, so hope to see you in that video as well, and thanks for watching this one. Bye bye.